Is Saudi Arabia moving away from the United States? My friends, over the course of this week, we have experienced something that potentially could be massive. The established financial world order of the past 50 years is now transitioning to something that is unknown, a kind of new paradigm as the petrodollar agreement between the United States and Saudi Arabia was allowed to expire here this past week. For a number of people that are watching this right now, they may be a bit confused. The term petrodollar is something that describes the US dollar, the USD's role as a currency that is used for crude oil transactions on the world market. This is something that traces back to the early 1970s when the United States and Saudi Arabia would strike a deal shortly after the United States went off the gold standard. And that agreement, for at least the past 50 years, is something that has had far-reaching consequences for the global economy. Not necessarily negative things per se when I say consequences, but it has certainly been far-reaching. We are going to go into more detail about this, but the petrodollar agreement came about following the 1973 oil crisis. Essentially, this would stipulate that Saudi Arabia would price its oil exports exclusively in US dollars, and it would invest its surplus oil reserves in US Treasury bonds. In exchange, the United States would provide military support and protection to the kingdom. This is something that would help the US dollar cement its position as the world's reserve currency, and it would usher in an era of prosperity for Americans as they enjoyed the benefits of being the preferred market of global corporations to try and sell their wares. In addition, the inflow of foreign capital into US Treasury bonds would go and support low interest rates and a robust bond market. But now it seems that all of that is set to change as Saudi Arabia is looking to move beyond its more exclusive relationship with the United States. This being evidenced by the kingdom becoming one of the newest members of the BRICS bloc, which I will say this right now, that is probably something for geopolitical history that we are going to need to cover in detail here soon. For those who are uninitiated, BRICS is an acronym for Brazil, Russia, India, China, and South Africa. The BRICS countries operate as an organization that seeks to further economic cooperation amongst member nations and increase their economic and political standing in the world. In other words, besides the more complex language that I could use to describe this, BRICS is something that sees itself as countering the traditional Western-led global order, with some member states viewing this organization as a way to boost their influence and remove their dependency upon Western financial institutions. Because of their economic power and the appeal of trying to disentangle from the West to a degree, BRICS claims over 40 countries are seeking to join the group, with an announcement going out in their 2023 summit that several nations were set to join them as full members. Full membership was supposed to be granted to Argentina, Ethiopia, Iran, Saudi Arabia, Egypt, and the United Arab Emirates on January 1st, 2024, but this agreement would not fully go through as Argentina under President Milei would end up pulling out of this deal. The rest of them would join this though, and that in and of itself is something that brings us back to Saudi Arabia. Because now, my friends, Saudi Arabia is now set to sell oil in multiple currencies, including the euro, Chinese yuan, yen, other things that are, well, different. I really don't know what else other word I could use to even describe this here in the first place. Essentially, not just the US dollar. If you go and look up the news about this particular subject, even the fact that I am talking about this right now, many people who watch oil and geopolitics report that this is a major shift in global energy trade and in economic power from the United States to more emerging countries in the global south. This is potentially huge geopolitical news, but how much of an impact will this actually have, and what does it mean? Well, if we're going to understand this in the first place, instead of relying on the words of those who would either doom and gloom or for those who would say that there is no problem whatsoever or issue, instead we have to look at how it is that we got here in the first place and the story behind the petrodollar itself.
Now, before we get back to the episode, I just wanted to talk about something that really does piss me off, and I know that right now I'm about to do an ad, but seriously, the fact that I'm getting spammed with robocalls from realtors that are trying to buy my house, and this has been going on for like a year, and I'm not the only one this has been happening to. I still have to deal with the real realtors, but thanks to today's sponsor, I no longer have to deal with the robocaller aspect.
Aura can identify data brokers that are exposing your info and submit opt-out requests on your behalf. Brokers are legally required to remove your info if you ask them to, but they always make it extremely hard to do so in the first place. That is where Aura can come in and handle everything for you, and it is incredibly nice to have. It's incredibly easy to set up. You don't have to download several different apps in order to get things like parent controls, antivirus, VPNs, password management, or literally anything else. You can just get everything at one affordable price altogether. And so look, okay, if you want to be taken advantage of on the internet, then honestly, that is your choice. But if you want to be able to protect yourself and you want to be able to protect your family, then go ahead and click my link down in the description and try Aura today. Thank you, Aura, for sponsoring this video. And now back to the show. So, okay, oil has been an important geopolitical factor for over a century at this point. Through World War II, the United States had been the biggest oil producer in the world, which is something that it would eventually lose, but then regain that status in 2018. Oil fields in Texas, in Oklahoma, and other states, as well as the Gulf of Mexico, would produce enough oil to maintain the cheap gasoline that Americans enjoyed over the course of the 1950s and the 1960s. This was great for the Americans, but by 1973, U.S. consumption of oil was also easily the highest in the world. With only 6% of the world's population, the United States was consuming 1/3 of the oil that was being produced. So again, 6% of the population consuming 33% of all the oil. That's a lot. This isn't even necessarily talking about gas-guzzling cars or anything like that. With the tremendous industrial growth and the expansion of highways and automobile production, oil imports were increasingly necessary in order to sustain America's economic expansion and growth. The world quite literally ran on oil, and as the biggest economy in the world by far, America was going to consume a lot of it. By the early 1970s, imports accounted for about 30% of the oil consumed in the United States, which had begun to curtail domestic production and exploration due to environmental concerns and governmental regulations. This is also something that needs to be addressed right now, because when people talk about the United States and oil production, there is a lot of jokes about the United States trying to take over countries around the world in order to get their oil. I get the joke, but technically speaking, this is not true, as the United States is again the largest producer of oil in the world. One of the key reasons that the United States has interfered with so many different countries in regard to its history and oil production is specifically because if oil prices go up around the world, even though the United States is more independent than all of these other countries that are dependent upon places in the Middle East, that still means that the price of oil is going to go up. Either way, at the same time that consumption of oil was rapidly increasing, production around the world would escalate. There would be 5 nations, Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela, that would go on to form the OPEC cartel in 1960. With an additional 7 nations that would join them by 1973, OPEC countries' production accounted for half of the oil produced in the world. This is a massive amount, and so OPEC would have powerful leverage in setting production output and in establishing a benchmark price for what crude oil would be in the world. Leverage that these nations were perfectly willing to use after a number of crises would occur in the 1970s. That's right, my friends, the 1973 oil crisis. After an invasion by 3 Arab states in the Six-Day War in 1967, Israel would acquire the Sinai Peninsula from Egypt, the West Bank from Jordan, and the Golan Heights from Syria. 6 years later, on October 6, 1973, Anwar Sadat of Egypt and Hafez al-Assad of Syria would catch Israel by surprise with a massive attack on both of its southern and northern borders. This would be the Yom Kippur War, something that was named that because it began on the high holy day of the Jewish faith. As a result of this attack, the Nixon administration would decide to come to Israel's rescue and would resupply its army with weapons. Because of the Cold War and their friendships with a number of Middle Eastern nations, the Soviets would naturally counter, supplying both Syria and Egypt with weapons. This would in turn raise fears for both sides that a major war was going to break out between the superpowers. But that did not happen. After 3 weeks of fighting, a United Nations brokered resolution would end the conflict, with Israel remaining in control of the territories that it had gained in the 1967 war. But while the fighting was still going on October 17, 1973, Saudi Arabia and the members of the Organization of Petroleum Exporting Countries, OPEC, they wanted to punish the supporters of Israel by announcing a 5% cut in oil output. Instead of having the desired effect, President Nixon and Congress would respond by providing an additional $2.2 billion to the Israelis. And that would then in turn lead to the Saudi decision, backed by OPEC, to go further and place an embargo on oil shipments to the United States and Western European countries, a decision that would cause the first oil crisis of the 1970s. This, my friends, was massive. The OPEC embargo would showcase the new power of the cartel in the world economy, and it would serve as just another example for many Americans as to their country's state of decline over the course of the 1970s. When the embargo took hold, oil prices would jump from around $2 per barrel to $11 per barrel. This impact would hit American consumers in their wallets as retail prices for gasoline would soar by 40% in November of 1973 alone. Fearful of the shortages of gasoline, Americans would line up at the pumps to try and refuel, while gas stations would in turn raise their prices several times per day. The gas lines would in turn create more panic for the public, as over the course of the embargo, many motorists would worry that if they did not go down and fill up their gas tanks today, then the price might be higher tomorrow, or whether or not they could even get any gas in the first place. This, in turn, created a bigger problem as, not surprisingly, with demand being so incredibly high, many stations simply ran out of fuel, with signs oftentimes saying, "Sorry, no gas today." However, this was not going to last forever. A break in the oil crisis would end up coming about in January of 1974 when National Security Advisor Henry Kissinger would go and meet with King Faisal of Saudi Arabia and persuade him that the conditions for the embargo had ended with the end of the Yom Kippur War. There was no point in continuing with that when it was hurting both countries monetarily, and the war wasn't even happening anymore. After Kissinger would negotiate the terms for reconciliation and helped end the embargo, Nixon would go and visit Israel, Egypt, and Saudi Arabia in May of 1974 and gained a massive outpouring of support from the Egyptian people, who ended up welcoming the US president, the first one to ever actually go and visit Egypt. At the same time that I say this, I know that it is not the focus of this video, but I feel obligated to mention that it was literally only 3 months later that Nixon would have to go and resign from the presidency after the whole Watergate scandal, so this was arguably one of the high points that he had for his foreign policy. But either way, here we are then, the petrodollar system. That's where we are then. By this point, with peace in the Middle East, this is where Saudi Arabia attaches itself to the petrodollar system, something that was never necessarily really forced upon it, but was more so a voluntary system that allowed Saudi Arabia to easily get the support that it needed. With global supply of dollars increasing as the US was no longer tied to the gold standard, oil exporters would earn more and more petrodollars thanks to oil prices being higher. The crisis that we just spoke about and the issues with Iran in the late 1970s, this is something that would essentially guarantee that. As for why dollars were used, the answer is because there really was no alternative. The dollar was the currency in which international trade and finance was done, and still to this day is largely carried out. So it is then that the deal between Saudi Arabia and the United States was struck in 1974. The idea behind this deal was very simple. The United States would go and buy oil from the Saudi Arabian kingdom, and in turn, they would provide them with military aid and equipment. Meanwhile, the Saudis would in turn spend billions of their new petrodollar revenue back into America, which in turn would help finance its own spending for defense, for domestic productions, for literally anything that you can think of. This was effectively a win-win for both sides. Washington would get a steady flow of oil and a market to buy its debt, while the kingdom would ensure its stability, peace, and make sure that it had a strong military backer. The agreement that we're talking about here is something that was a boon for the dollar, and was key in cementing the greenback as the world's reserve currency. Due to Saudi Arabia's prominent role in the global oil trade, the agreement had very far-reaching effects. And as a result, virtually all of the world's global oil transactions were priced in dollars. Because it is that every single country in the world needs oil in order to do just about anything in our modern day and age, this would ensure a constant demand for dollars. Every country needed them in order to buy the oil. This demand for dollars would in turn support the United States government's borrow and spend policies, along with its massive deficits. It didn't really how much the United States would spend. They could always borrow more money because people needed to get dollars in order to be able to pay for oil. Since the world needed those dollars, it would guarantee demand for the greenback. That in turn meant that the Federal Reserve could just print more and more dollars if it needed and issue more treasuries than it could have otherwise. As Nasdaq.com would report, the agreement would effectively create a captive market for US government debt. They could do whatever it is that they wanted, and the world would support it. Of course, when we talk about this, not everyone was happy about this situation, obviously. Even before the current event that we're talking about with Saudi Arabia, the petrodollar was arguably getting more and more ragged before the expiration of this agreement. Late last summer, the United Arab Emirates would settle an oil trade without converting local currencies to dollars for the first time, when India's top refiner would pay for crude in rupees. Besides the Middle East, India has also bought oil from Russia without using dollars, and this is important because with India's growing population and industrial sector, it ranks as the world's third largest oil importer, which as the nation grows is set to only increase. China, prior to the lapse of this deal, has been pushing for years for Saudi Arabia to accept the Chinese yuan as a currency. Something that, if we want to talk about that, considering how many times I've talked about China, many nations have been hesitant towards actually doing this because of China's tendency to manipulate its currency in order to keep it artificially weak for export purposes. It's not exactly a safe and secure thing as it is. But now, it has actually happened. As India Today would report, quote, "This move by Saudi Arabia marks the beginning of a major shift in global economic dynamics, though its full implications on international trade and finance remain to be seen." That, my friends, may require a little bit of an explanation. There are potential ramifications of the petrodollar's demise, but none of these are necessarily set in stone. The end of the petrodollar could accelerate global de-dollarization, and that for the US economy would be an utter disaster. At least it could be in the future, but not right now. While the current de-dollarization trend doesn't directly threaten the dollar's role as the world currency yet, it doesn't mean that the entire world is simply dropping it. It could foreshadow bigger problems down the road, especially if this is something that accelerates. The dollar as it stands is already on somewhat shaky ground. Many countries are looking for ways to minimize their dependence on the greenback due to growing concerns over America's use of the dollar as a kind of foreign policy weapon. As an example of this, just think about sanctions. After the Russian invasion of Ukraine, the IMF managing director, Gita Gopinath, would warn that sanctions against Russia could erode the dollar's dominance by encouraging smaller trading blocs using other currencies. And that's kind of what we're seeing here. Now, I know with me saying that there's going to be a number of negative comments down in the comments section. So before you think that I am saying something that I am not, just please understand this. I am not saying that this is a morally good or bad thing, merely that in trying to isolate specific countries, this will result in those countries trying to create their own systems in order to not be dependent upon the global dollar market. And without the petrodollar supporting the greenback, we could in turn see more rapid de-dollarization. Even for those who try to minimize any threat to the dollar status as the global reserve currency, these people will likely concede that the expiration of the petrodollar agreement is something that could weaken the dollar over the long term. That in turn would spill over into US financial markets, particularly the bond market, and it would also lead to more price inflation for the American consumers as it would weaken their position as buyers of global commodities. To pull an explanation from Sputnik, which normally I would not utilize a Russian government explanation, but this is something that actually factors into what we are talking about, quote, "If world players significantly reduce the use of US dollars, the US's ability to issue dollar debt and earn dollars for exports will diminish, and the nation's economy will shrink." In effect, if other nations no longer need dollars to conduct trade, the demand for dollars could plunge significantly. That would in turn create a dollar glut and a rapid devaluation of the greenback. Interest rates on US Treasury bonds would then soar, and this is something that this cannot happen for a government that is already servicing more than $34.5 trillion in debt. Mind you, when we talk about this, modest interest rate hikes by the Federal Reserve have already driven interest payments sky high. The US government now spends more on servicing its debt than it does on national defense or Medicare. In other words, though right now the issue is not immediately severe, there is an idea that if something like this progresses and becomes worse, the US economy could more and more seem like a house of cards in the future. Though strong in a world that is dependent upon the dollar, what will happen in a world where they no longer need the dollar as much? Will this actually happen though? I don't know. I can't predict the future. The only thing that I can do right now is I can tell the stories of the past and how it is that we got to where we are today. And so that, my friends, is where it is that I'm going to have to leave this video. There are other things that I want to talk about with Saudi Arabia, like the Line project and the updates on that. There's also updates that I'm going to need to do on Haiti, on Argentina, and others. So please, by all means, let me know in the comment section below what it is that you'd like for us to talk about next. This is a shorter video than what it is that I've normally created, but not every single thing that I make is going to need to be an hour long, because for some of this, there simply is no information, and I'm not going to go and sit here and try and extrapolate upon things that don't exist. That would be incredibly dishonest. Thank you, my friends, for watching, and I will see you next time. Goodbye, guys.